Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. Okay, daily chart, and the Bears, they're testing the 9-day. They're below the 9-day. They're below the weekly pivot. Post FOMC, the 30-20 area, 32-20 area sealed off. You had the pre-FOMC price at 31.96, seal off near the close. And then they made a run at 80, which sealed, and then it really got loose overnight. So hourly chart, and what you've got is some expansion out of this, out of this compression. So this compression moved to the upside. We compressed for another 3 sessions. This is your 2 p.m. bar from yesterday. 21.25 was the extent of the move to the upside. It sealed off the hourly midband here near the close, and then it dropped. So yesterday was a big day for us, but honestly, we missed more than we made because right at the close we got a little whippy. I got us out of it, and then, I like trading the overnight. The problem with trading the overnight is sometimes life happens. Life happened last night, and so this whole move down, I missed it. I had an 80 marker in for the room, which I pulled, and I was going to, I gave a 72-73 bull bear. But then I was totally out of pocket. I couldn't officially convert a short against the bull bear. I mean, the levels were out there. So we had no setup for this. So you know what you do? You talk about it for 20 seconds on the webcast, you pick yourself up and move on, It's been a good week. We got a 100-handle week in the books, and we got 2 days to go. Volatility's back, so it didn't really go away, but I think we're getting more directional volatility now. So it should be a good day of trading. Tomorrow should be a good day of trading. They got a lot to fight over down here now. They got to deal with this. You got weekly pivot in the 9-day, and the Bears have such a golden opportunity to seal some of this off. We can speak historically, recent history, and then we can speak practically. Recent history says they're going to find a bounce here, and they're going to take it back up at least to the hourly midband up there at 58. And if things go true to form for recent history, they're going to bounce this thing today and tomorrow once they find an area where it wants to stop. Practically speaking, with the Fed yesterday and this hard push overnight, I like where it was defended here. I really like that move. So what was that, 3 in the morning? 5 in the morning? Yeah, of course it was. So if they can hold the 9-day and they can hold weekly pivot, then this area, it's a wide range, but we got a lot of vol. So this chunk of price is your bull bear this morning. Okay, so that's really where we are. I'm kind of hoping, the kind of day, and I hate that word, I'm really hoping all of the vol is not in the overnight and we don't end up with kind of a boring regular session. We'll know soon enough, but I would expect I would expect them to take a look at weekly pivot. To the downside, they still have to deal with 3,100 on the downside if they keep going. But sealing this here, let's back out for a second. So to the downside, you've got this low from June the 4th down at 30.87 half. Okay? If it breaks through that, then you're dealing with here. That's June the 2nd, 30.47.75. So whether we got ahead of ourselves to the upside or whether it was a big giant walk up into the Fed or whatever it was, it doesn't really matter. It's needed to come in. I think the biggest reason why it hasn't been able to come in is because everybody wanted it to come in. So it's coming in a little bit. How far it comes in remains to be seen. On the bigger picture, we are still 50, 60 some handles away from the daily midband down at 30.42. And the other moving averages, the 50, 100, 200-day exponentials, are all below 3,000. The one administrative thing I will mention to you guys is, depending on who your platform is through and who your charts are through, either today or tomorrow, today after the close, tomorrow, we're going to roll into the September contract from the June contract. So this is an administrative thing, but it's going to change what the front month contract is. So when you come in tomorrow morning, we won't be talking about the June contract anymore. We'll be talking about September. Not a big deal, but I figured I would mention it because if I don't know, every platform is different, but I do know a lot of people use Thinkorswim, and what will happen is if you're using the continuation chart and not the front month chart on Thinkorswim, then I think either at 4:15 or 4:30 when the market turns back on for that 4:30 to 5 o'clock session, there'll be this big gap on your chart, and it won't be, if you have a trade on, it can be startling. But the reality is, it's moving into that new month. So just for you newbies, just understand we're going to roll into the September contract, and it has no effect on whatever trade you're in for June. It just means that the eyeballs now are heading into September. Okay, so as more eyeballs, there'll be more eyeballs in the June contract today. There'll be more eyeballs in the September contract tomorrow. So for me personally, I trade the current front month on Thursday. I move to trading the new front month typically on Friday, and everybody, no matter what your persuasion is, everybody's moved over to whatever the new contract is going to be by Monday. So that's my 2 cents on the roll. I hate the roll because it fucks up your charts and it makes price sometimes do weird shit, although it's nothing like it was, back 5-10 years ago. All right, everybody have a fantastic day. Take care, trade them well. The moral of the story is, if you're going to trade, sometimes you're going to miss moves. And if you miss moves, pick yourself up, move on, catch the next bus because it's coming around the corner. Take care. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.